Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Agarwal.
Yeah, thank you, Margaret. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q1FY21 call of Star Cement. On the call, we have with us Mr. Sanjay Kumar Gupta, CEO, and Mr. Manoj Agarwal, CFO of the company. At this point of time, I'll hand over the floor to the management of Star Cement for the opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Yeah. Good evening, everyone. I'm Sanjay Kumar Gupta, CEO of Star Cement. I would like to welcome you all in this Q1 FY21 earnings call. I have with me Mr. Manoj Agarwal, who is the CFO of the company. He will take you through the quarterly numbers, and after that, we'll open the floor for an interactive session where you will be able to ask questions, and we'll be happy to reply to your queries. Now I'll request Mr. Manoj Agarwal to take you through Q1 numbers. Over to Mr. Manoj Agarwal.
Hi friends, very good evening. I, on behalf of Star Cement Limited, welcome you all to our con call for discussing our numbers of Q1 FY 2021. I would like to clarify that we are discussing on the historical numbers and there is no invitation to invest. Having said that now, I will just take you through the Q1 number followed by to-date number. As you all are aware that on account of declaration of lockdown by the government in view of COVID-19 pandemic, there was no operation in the month of April 2020. And also all the plants have not started its operation from the start of May 20 in full-fledged manner. But the same were started operation gradually as per the approval for permission received from the respective state government. In addition to that, there was also restriction in movement of people and vehicles. These factors had an impact on the operation of the company for this quarter. So that is I will not repeat the degrowth, why the degrowth is there in the volume or numbers. Now starting from the clinker production, during the quarter ended June 2020, we have produced 3.31 lakh ton of clinker as against 6.18 lakh ton same quarter last year. So far as cement production is concerned, we have produced 4.16 lakh ton this quarter as against 6.55 lakh ton same quarter last year. Now I will take you through sales volume. During the quarter, we have sold 4.47 lakh ton of cement and 0.02 lakh ton of clinker as against 7.1 lakh ton of cement and 0.08 lakh ton of clinker same quarter last year. This is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 3.43 lakh ton as against 5.31 lakh ton during same quarter last year. And as far as outside Northeast is concerned, we have sold 1.04 lakh ton of cement this quarter as against 1.88 lakh ton same quarter last year. In terms of blend mix is almost 9% is OPC, 1% is PSC, and the rest is PPC. These are the quantitative number of this quarter. Now I will take you through to the financials. The total revenue figure this quarter is around 292 crore as against 460 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of around 71 crore as against 119 crore last year. PAT after minority interest is 43 crore as against 84 crore in the same period last year. On per ton EBITDA basis, front, it is 1586 during this quarter as against 1643 per ton same quarter last year. This is what our quarterly and year-to-date numbers till first quarter. Now I request all of you that if you have any query, you can ask the same, and I will request Vaibhav to moderate the query wherever it requires. Thank you. Hello.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, you may press star and one at this time. The first question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, sir. Thanks for the opportunity. Two questions. I missed the volume numbers of the cement and clinker sales. Can you please repeat that once again?
Yes. Cement, the production figure or sale?
Sales volume for cement and clinker total.
Cement is 4.47 lakhs and clinker is 0.02 lakhs. Altogether it is 4.49 lakhs.
And corresponding year numbers, corresponding to year numbers.
Yeah, against 4.47, corresponding is 7.19.
Right.
And against 0.02 clinker, it is 0.08. So against 4.49, it was 7.27.
Okay, this is helpful. And also, can you comment on the current pricing environment? How has the pricing been post-June quarter? What are the current prices versus June quarter average?
See, the prices post-June has, I will say, in Northeast they have corrected a little bit because post-June we have been also facing a lot of a flood situation, mostly in Assam and also in some part of West Bengal and Bihar. So Northeast has seen a little bit of reduction in prices. I'll say rest of Northeast, which is Bengal, Bihar, Jharkhand and these states, has seen a flattish kind of price environment in the month of July.
And on demand, so like we have seen some demand recovery in May and June. Some bit of it continued over the first half of July. So how do you see the demand scenario currently and any projections for the year?
See, I think we all have come to this, but we started this particular year with I think April was in washout, and we started plants in May. Again, the demand has started picking up. We are pretty happy to see the demand in the month of June, but and July has also was a similar kind of demand which was there in the month of. So June and July we have seen good pickup in demand. But I think early August we are seeing tapering of demand, which is coming, we are witnessing in both the segments, also in the rural segment and also the urban side. Urban demand was in problem even in the month of June and July. It was only the rural demand which was actually carrying the flag. So. But we have seen tapering of that rural demand also. So it looks that it is largely the June-July uptick in the demand was largely due to pent-up demand, which was due to non-stocking of cement, which was not available in hardware shops. Dealers were not having much of stocks in the month of maybe March, April. So the people have been largely doing their jobs which they were unfinished. As I have stated in the month of June also, while commenting on the last quarter results, that the channel checks at the dealers and they are suggesting that people are not starting any new construction for the time being. So which will have an impact on overall cement demand going forward. I think this will still be too early to comment, largely in quarter 3 and quarter 4 demand. We have to still wait for at least monsoon season to pass.
Sure.
This will be the time we'll be able to make proper assessment which way the actually demand trend is going.
Sure, that is really helpful. And one last question on your other expenses. So your other expenses on per ton basis have reduced meaningfully. So how sustainable are the savings are in this, and what is the kind of trajectory going forward?
See, I think largely the other expenses, things which are, so if you look at it, I think these numbers will not be very representative because of the situations which are there in quarter 1.
Right.
A lot of fixed costs have actually gone down, so traveling expenses are not, nobody is traveling, so then it's a question of expenses, right? So, but all those costs which are, I think there has been a lot of reduction on. Few costs will definitely be able to continue, such as the rental cost, which we have been able to reduce. We have been working on certain other cost parameters. We have been renegotiating a lot of contracts with our vendors in terms of pricing. So probably those will be definitely recurring in nature. But I think expenditures such as the brand expenditure, the marketing expenditures, which has not been carried out in Q1. And obviously, once the sales pick up, once we enter Q3 and Q4, definitely that will pick it up. It will be difficult for us to say at this point of time which cost is going to. Can you take it as a representative number? I think you have to still wait for Q2 and Q3. But definitely on some cost sides where the company has been working on it to reduce the cost, those will definitely be sustainable.
Sure. Thanks a lot.
Thank you. Anyone who would like to ask a question, you may press star 1. The next question is from the line of Chintan Shah from Investec. Please go ahead.
Hi, sir. Thanks for taking my question. So first, I wanted to ask, could you please highlight, how the profitability would differ in our eastern market versus our northeastern market?
So largely, I'll say that in this quarter, the profitability, or I'll say the overall trend used to be for us, it is Northeast used to be a higher profitable zone for us, and then outside Northeast was always be a lower profit zone. So if I give you a ballpark number, we used to have an EBITDA margins of somewhere around 1,800 odd in Northeast, and we would have an EBITDA margin of around 900 to 1,000 rupees as far as the East is concerned. And I think still the trend continues in the same way.
Okay. So, sir, in that case, once we are done with the capacity expansion, how do you see the volume exchange? I see currently it's around 75-77% is in Northeast. So, what would that be post expansion? Probably once we ramp up.
So I think today we are doing around a 70-30 kind of a ratio. If you look at it, last FY20 full year number was somewhere around 73-74%, and outside Northeast was around 26-27%. This will definitely undergo a change once we start focusing more on outside Northeast, once they start up Siliguri plant by end of maybe September. So that will definitely change, but I think with the Siliguri plant, it will go up to 40-60 kind of a ratio, which will be there.
Okay. Sir, can you help us with the lead distance for this quarter and how it has changed as compared to previous quarter?
Yeah, it is this quarter it is around 290 kilometers. As against last quarter it was 271 kilometers.
Okay. So, sir, can you highlight why the change has been, why is it increased a bit?
Because a lot of the hard unit which we are not working at the Bengal, okay, then we have to move the material from Guwahati in this side, South Bengal side, from Guwahati and from that plant. So that is why the distance has gone up this quarter.
And one more thing you have to understand that, see, all these places, each state has opened at different point of time, right? So, Bengal was, I think, there was, in South Bengal, there were some early signs of opening up. Assam was little reluctant in opening up. Meghalaya was little reluctant in opening up. So, wherever we could get that opportunity, I think, again, as I say, right, Q1 numbers should be taken as with a pinch of salt to understand a trend. I really don't think that will give you a trend. If you really need, so our expectation is all these things will get moderated. and over next 2 quarters. So taking any cue from this number will not be correct.
Okay, so around 270 kind of number is a sustainable one. Is that right?
I think we've always been doing around 260, 270 kind of a number. Once the Siliguri unit comes up, definitely this number will again will moderate a little bit as the concentration of selling will increase during the Siliguri and North Bengal and East Bihar region. So that will definitely bring down the average lead distance for us.
Okay. Thank you so much, sir. So one more question. So any update I was saying in terms of coal mining in the region? I believe Coal India was supposed to organize something. So is there any update on that side?
Yes, I think government has already submitted a plan. The plan was also got approved. So they are starting with the 2 lakh tons of coal auction immediately, because there is a 35 lakh tons of coal which is overground already available in Meghalaya, which is required. The Coal India is required to auction as per the rulings. So that process is kicking in now. I think in next about a month's time or 15 to 20 days time, we will see a 2 lakh ton auction coming up immediately.
Okay, that's great, sir. Thank you so much for answering.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Yeah, hi, good afternoon. So I just wanted to understand on the demand aspects a bit better. So you mentioned that the pent-up demand possibly was driving June and July volumes. So in August, how much would be the decline from, let's say, the July levels?
Yeah, but I think at this point of time it will be difficult for me because every region is behaving little differently. And again, at the initial days of August, Bihar was facing a lot of rains. So as of now, definitely, as I say, that in the month of July we were, in fact, if you compare July versus the corresponding July last year, we were actually better than the last year, right? But August, we are running down at this point of time when we speak, right? But will that be continuing? Yes, definitely we are seeing that there are signs where whatever demand is supposed to come from the rural segment, which is not coming in the rural pockets, largely from the Bengal and the Northeast market. So we are on I will say month to date in the month of August we are down in terms of volume, and that is largely from the rural side. But we are still waiting because there are a lot of flood situation which has happened in Assam also. So it may pick up in the later part of the month probably, and as soon as the rain tapers off, because in Northeast the rain actually starts tapering off in the month of September itself. Unlike the other part of the country, the rain continues till first half of October also. So I will definitely wait for this trend, a clear trend to emerge. But as of now, whatever is there is a decline which is visible.
But would the decline be, let's say, like high single digits or double digits?
I'm not putting a number to it, Amit. At this point of time, it is too early for us to put a number to it.
Understood.
But I'll request you to wait at least a month.
Sure, got it. And just one question on the Siliguri grinding unit. So I joined the call a little late. So the timeline mentioned, I think, was September 20 in the last call. So what are you going to commission it by then, or is it further delayed?
Yeah, we will definitely commission it by September. It is on track to go on stream in September.
And the debottlenecking of clinker, that will also be done during this maintenance season, right?
Yeah, I think this is August and September. We are going to do some maintenance at Meghalaya plants, which is still continuing. So we will be complete with debottlenecking, which is there in Meghalaya.
And there's no further progress on the Meghalaya clinker expansion. Is that understanding correct?
No, as of not, no. As of now, there is no progress as of now.
Okay, that's all from my side. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and one. Ladies and gentlemen, you may press star and one to ask a question at this time. The next question is from the line of Rishit Shah from Dhanki Securities. Please go ahead.
Yes, sir. Good evening. So just from the demand perspective again, so what would be our mix of trade versus non-trade, and how is it shaping up in July to August?
Because as of now, in this quarter, the trade and non-trade is around 86 14% or 85 15%, right? We are not witnessing any significant change in the month of July and August also. So institutional demand is still there. The government has started some work, so it is supporting the institutional demand. So we ideally used to have around 80-20 ratio. So 80% was trade and 20% was non-trade. I think once the quarter 2 and quarter 3 is there, we will move back to around 80-20. Which used to be our normal levels of trade, non-trade bifurcation. But if I look at it, July, August, we are seeing non-trade demand, which is an institutional demand, coming up better than the June. Right. So going forward, also we hope the government will keep on spending, because one more thing which you need to understand. See, there are 3 large states, which is Assam is due for an election, Bihar is due for an election, and even the West Bengal is due for election. Bihar is due in this year, later this year, and Bengal is due in May 2021, and Assam is also due in May 2021. So these are 3 large states which are going for election. So we hope to see some kind of government expenditure coming up, and that is going to support at least the institutional demand.
Okay, understood. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question at this time. The next question is from the line of Arijit Datta from Axis Capital. Please go ahead.
Good evening, sir. My question is regarding what kind of demand from the government that you normally see coming, because in Bengal, what I understand is mainly even pre-lockdown, the demand was mainly coming from the government expenditure in the rural. So if you can throw some light on the type of government expenditure that you see, the work that the government do. Because currently in Bihar, what I understand that bridges, all these works are going on. What kind of work is happening in Bengal?
See, you're right that in Bengal there is, I'll say the government expenditure which normally happens in the rural areas, that is coming up. We have also seen.
So what kind of expenses? Means government spend on what? I mean, is it like Shauchalaya, Secretariat building, roads? Any clarity on what exactly the government do if they have to push the demand and the situation currently, if you see that kind of demand?
No, see, actually, so the government largely spent on constructing state highways, constructing bridges, right? And rural connectivity. Government is spending a lot in rural connectivity. Yes, all these. When I talk about government expenditure, that does not only mean that state government has to make expenditure. All the centrally sponsored projects also get implemented through the state government only, right? So what happens is, so you have a situation where affordable. There are situations which are the government is making certain affordable houses which the government is supporting. So when I'm talking of government expenditures, that there will be certain. So in Assam, you will find a lot of hydel power projects that the government is doing. lot of road projects the government is doing, NHAI. So when I talk about government, that does not mean that only PWD has to make expenditure. There are government agencies who will be doing these jobs. So NHAI does that, Border Road Organization does it. Certain defense projects which are there. In Northeast, we are finding certain defense projects which were not moving actually have started moving in. So all these and even the industrial demand, so to say, in terms of construction activities on various highways expansions, right? So 2-lane getting converted into 4-lane. We've been seeing one Siliguri highway which are leading from Jalpaiguri to Siliguri, connecting from our plant which is under construction. The work was stalled for almost 2 to 3 months. Now it has started again moving up. So all these activities are there, and any government which is there unfinished, whatever unfinished projects and the new projects which they have, they would like to put that extra expenditure and extra accelerate that work and then complete it before the election hits in, right? Before the model code of conduct actually kicks in. So there are expenditures which are happening in. I'll not say in only one area government is working. They're trying to work in all around wherever the government expenditure has to root in. They are all working in those areas.
Sir, thank you for the good clarity that you provided. Really, thank you for this. Sir, on the election front, which you have said rightly that there are chances that government will be pushing for expenses. Now, for example, Bihar is this year only, and we are sitting on August. Assam, Bengal will be in May, just few months away, and still we are in COVID lockdown kind of scenario where existing projects are not workable. So do you think any new projects that the government will be starting, do you see some kind of thing, or we will see a vacuum after Feb kind of thing, even in the government projects kind of scenario, especially in the East region?
See,
what is your experiences, sir?
Our take is that whatever unfinished projects, the government has a lot of lined up unfinished projects. Those will definitely get completed. And any projects which the government says, largely it is not that the government will not start the new projects. They may start the new projects, they may not complete in this year. Everybody would like to see that there are a lot of announcements which takes place before the
elections.
Election
Yes.
section. And there will be a lot of disbursement which also takes place just to inaugurate those projects, right? So every state, every government does it, right? So we hope that definitely those will definitely push up some demand of cement.
Right. Thank you, sir, for the elaborate answer.
Thank you. Anyone who would like to ask a question, you may press star and 1. Please note, this is a final reminder for questions and no further reminders will be placed after this. Thank you. The next question is from the line of Kaushal Bothra from Antique Stock Broking. Please go ahead.
Good evening, sir. Thank you for taking my question. My first question is, sir, do we have any premium products, and what will be the premium product mix of the treatment?
Yeah, we have a premium product which is the Star Anti-Rust Cement. We had launched it only in, I'll say, last part of the FY20. So it was only launched in the month of December 19. So that has still, I'll say, it is only 3-4% of our total sales. That's how it is. And that is gaining momentum in both the markets. And we are aggressively promoting that brand also. Going forward, we hope that in 18 to 24 months, we hope that at least it will start contributing around 10% of the total sales.
Also, sir, if you could share what will be a percentage of primary dispatches which are directly to the depot or the government side?
On primary and secondary dispatches, I think we don't have the number here. You can send that query to us. We will be happy to reply that.
Okay. And also, sir, if you could give a sense on what would be our percentage of coal imported for this quarter?
At this point of time, they're not having any local supplies. Everything, the imported coal has I'll say in the mix of it, at this point of time, almost 80% of the coal is sourced from within the country, which is Coal India auctions and from eastern coalfields and also from northeastern coalfields. Only 20% is imported because the availability of coal at this point domestically is good at this point of time.
Any other question, Mr. Gupta?
No, that's it for me.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi, good evening, sir. I have few questions. First, on the Northeast market, could you repeat what was the decline that you have seen in 1Q? Like, what is the sales number in Northeast?
Northeast sales numbers, I'll ask what is the Northeast sales number?
Northeast was 3.43 lakh ton.
Okay, so around 35% down year on year, right?
Yeah.
Yeah.
Sir, how has been the scenario? Was it, I would, April would have been a complete washout. Or did you, and how was May and June? When did sales pick up in Northeast? I just want to understand, is this decline 20% and beyond continuing, or we are now close to pre-COVID levels of last year? In Northeast particularly.
Rajesh, I think we had sold around 15,000 ton of cement in the month of April, right? Only.
Okay. Oh.
April was completely washed out.
Right.
May has come back, so we had done around 90% of what we have done. Because May also, it did not start at one go, right? That it is not a...
Right.
It doesn't work like a switch, right? So,
correct.
So Meghalaya did not operate. There were restrictions on movement of trucks.
Mm-hmm.
Yes. So all that hampered dispatches. And June was largely okay. So as I said, June I think we did a little better than the corresponding quarter last year. So we are 2% better than corresponding June. Correct. So that is why you are seeing the volume decline of 33-34%.
Right. That is April impacted, right? Okay. So you're saying the Northeast market you saw slight growth in month of June, or overall basis you saw improvement in June, month of June?
Even we have seen some improvement in the month of June. We have seen improvement in Northeast, largely Northeast markets, not in the other markets.
Okay. And sir, on the exports front, what is the scene? With your Siliguri coming through, will your exports totally dry up? Clinker exports?
No, I think, clinker export is used to be largely to Nepal market.
Right.
So I think we will be, once the Siliguri starts, we will not have extra clinker to sell to export. So that will definitely dry up.
Okay. And clinker production was 330,000, sir. Manoj sir, if I heard correct.
3.31 lakhs, yeah.
3.31 lakhs, okay. And sir, on this cost front, first on the employee cost, if I see, this number, it was, yeah. So this, this number had gone up from 29 odd crore, 30 crore to 35 crore in March, and this quarter it is back to 30 crore. So, what is the recurring number, and will Siliguri further, what sort of employee cost addition happen post Siliguri is totally, commissioned?
Rajesh, we since the June quarter, we have not resorted to any salary reductions in this quarter, right? So that is what we have. We have paid everyone, and there's no reduction on account of lockdowns and all that.
Okay.
That is one thing which we have done. So I think that is how you see that volumes have gone down and the salary expenditure, the fixed cost,
That's okay.
that is there. Yes, there will be some increase in absolute term. There will be an increase in facility pattern. We haven't estimated at this point of time because largely these kind of plants will need a 2 million ton cement plant will need around 250 to 300 people, and that is going to and the expenditure related to that will definitely get added. But I think in absolute, it may go up in absolute term, but per ton basis, I think definitely it will be reduced.
Just one more question on the coal auction that you talked about, 2 lakh ton being, is coming for auction. So by when would that is expected to be available, given the lockdown constraints? And any idea or any color on the pricing that is being thought about?
No, I think we hope that in next 15 to 30 days time, the government will start auctioning that coal. The coal is available in near vicinity of plant. We do not, and that is so. I don't think that the pricing is going to be any different than what it used to be. Definitely, there will be some increase in the price because in the first auction, because everybody will be scrambling in terms of for buying the coal. But I think as soon as this entire process gets smoothened, there is 35 lakh tons, which is sufficient for at least 4 years of entire coal requirement of Meghalaya, right? So it looks that then I think the prices will stabilize. Initially, we may see a spike in the price, but on coming 2-3 quarters, it will moderate to the levels which we had. So I think maybe a 5,000 rupees kind of pricing we can expect.
Would it be cheaper versus the current operating cost or landed coal cost, or
it will be much cheaper than what we are incurring at this point of time?
This is okay. That's great. And lastly, on the FY21, what sort of volume number you are working with?
So internally, what we are trying to do, we are trying to look at the volume. We achieved the same volume what we have done last year. That is in spite of what April has done and what May has done to us. We are expecting, but yes, definitely once the Siliguri comes up, we can look at increasing that number. But at this point of time, we are looking to achieve at least the last year number.
All the best, sir, and thank you for taking the question. I'll come back and see.
Thank you. We'll take one last question from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hi, thank you for taking my question. Sir, 2 questions. Firstly, it appears that there is a divergence in the volume trends between companies operating in the same regions where you are operating. Has there been any market share shift which has happened in the last 2-3 months, or just a base effect one should not read much into it?
So let me tell you this, that I think there's not much to read into this, because every plant which is situated in there are certain plants which may have started a little early. There are certain plants which may have started little, and then some people may have started their dispatches a little earlier than somebody else. So I don't think that there is no in terms of volume, there is no shift in overall market share for any of the brands. I'll see that there is some shift in the lower category brands, definitely, which is you will find an Amrit Cement and a Green Valley, and there is some decline in their volumes. That is there, but I don't think I'm not willing to read too much into those numbers. I will definitely wait for Q2 and Q3 to get a clear picture on whether there is a decline on their sales.
Okay. Secondly, sir, you mentioned some renegotiation which will structurally lower the cost on the other expense side. If you could little bit elaborate more on what the nature of these expenses are, what it's like a third party temporary labor contract, or what these expenses are, and on a 2-year basis, this will see a reduction, or this is just a 1-year reduction on a AMC contracts now, given what the situation is currently?
So I think there are certain costs on which I think we have worked right. So you look at the rental thing which the company had, right, in our warehouses and small contractors who have been working in those warehouses, right? So there's been renegotiation going on into that. We had a lot of rental expenses which takes place in our advertisement and the billboards and the hoardings and all that. Now, there is a significant reduction in those costs that has been achieved. So I think that's a structural thing that will definitely will not move up in a hurry till such time the overall demand scenario and overall people appetite for making those expenditure go back to pre-COVID level. So that is there are longer term contracts on certain supplies which we have done. Maybe we are working on certain raw material contracts. Those have been renegotiated. We have changed certain methods of bringing the flyers. Earlier we used to bring it in a closed wagon. Now we have started bringing that flyers into an open wagon, which the railways have allowed. Even the Coal India has also started certain and has become more transparent, I'll say, in terms of listening to their consumers. The Coal India is also offering some kind of a quality discounts which they are doing. So all those things, right? And then all the purchase contracts which are there have been renegotiated, and we are continuously reviewing those things. I think some of those, I will not say all of them, some of them will definitely be structural, and that will definitely give a longer term cost benefit to the company.
Sir, would it be possible to quantify what's the structural reduction in the cost, on either on an overall basis or on a per ton basis, if possible?
At this point of time, I don't think that there is. It will be right to put any number to it.
Okay.
But definitely, I think in quarter 2, quarter 3, once we see normalization of these things taking place, then we will be definitely in a position to quantify those.
Sure. So last question from me, if there is time. For the new unit that gets commissioned on a steady state, the profitability should be in line with what the regional average number you're mentioning, or there are other factors that could influence the profitability for the new unit? Thank you.
I think largely it will be the regional profitability side of it, but definitely it will entail certain cost savings which we have as such today. We are bringing complete clinker from there and taking fly ash at this point of time to our grinding units in Northeast and then bringing it back to the markets, right? So that will definitely have an impact on the fly ash freight cost. Will have a certain saving in this market. We've been operating these smaller units which has got their own disadvantage. I think the 2 million ton plant will definitely give us a lot of economies of scale, and it will it will have an impact on overall the fixed cost structure of this particular region, so to say, as the volume grows up. So definitely it will have its own advantages flowing to the company.
Okay, thank you, sir.
Thanks.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. Sir, I have one question actually. Sir, you briefly said on the call that you are looking at an East India profitability of 900 to 1,000 rupees a ton, if I heard you correctly. So is this your current profitability you are saying, or is this the future expected profitability of 900 to 1,000 rupees a ton?
No, this is a current profitability in whatever we are doing in our areas. I think we're looking at to have better numbers than this once we start operating from Siliguri.
So what I was referring to, so if you are saying you are making 900,000 rupees in East India, so is it fair to say that for the eastern players, since you are incurring an extra freight cost, the So Eastern profitability should be higher by about 200 rupees or 300 rupees. Maybe it should be 1200, 300 rupees a ton on a normalized scenario. If you can make 1000 rupees, then is that a fair assessment to make?
See, I think it will be difficult for you to make comparisons because we are operating from Siliguri and we are bringing from that region, which is largely our sales are based out of North Bengal and East Bihar. So we are largely a pocketed player. And then even the clinker, most of the players in East, which are largely Durgapur based and South based, Durgapur or South Bengal based plant, they also bring their clinker all the way from Chhattisgarh and also from Odisha. Their cost structure will also be somehow similar to us. And 100, 200 rupees is something which any cement company, their own cost economics will definitely will vary to each company. So I don't think.
No, sir. What I was trying to ask you is that so when you enter East in full-fledged, when you go to Siliguri and you enter East full-fledged, so your profitability versus the East India players could be a little higher, is what I was trying to understand. Because then you will have a cost advantage also.
Yeah, as I said, I've been saying this because because our clinker transportation cost, our cost of getting the flyers, which is already built in. Definitely, we hope that we will have a better realization than the average Eastern player.
Okay. And so one more last thing I just want to ask. I want to ask your comments on that. You may answer it as you feel. But what we have also observed is that in the Q1 quarter, especially despite the pandemic, most of the cement companies have reported record high profits and record high profitability. Even for Star Cement, the profitability is very high. And we have seen some very important structural business trend changes in most of the regions. So are there any trend changes in Northeast India also in terms of any specific business practices, in terms of how the industry is looking at going forward from here on after the pandemic if it goes away? So any comments on that you would like to?
No, I think numbers which people have been reporting, they vary on the basis of regions in which they operate.
Right.
And there are a lot of seasonality to those numbers, and geographical geography and the seasonality is also there. And we are not seeing any structural changes which is taking place in Northeast. And the demand, another thing, it will all depend on how the pandemic behaves, because ultimately we've been seeing that we used to have a smaller number of COVID cases coming up. Today now we are reporting around last 65,000 COVID cases every day. Even in eastern side, I think, and even in Northeast also the cases have been rising. So it will all depend on how the pandemic behaves going forward. And our assessment is definitely there that now the governments have also become very vigilant about it. And I think in next 2-3 months, if they are in a position to control it, probably the demand will come back. That is what our view is.
Yeah. So what I was trying to refer is the demand will definitely come back sooner or later. That is for sure. But in terms of any changes on ground practices, like South Indian companies have been telling us that they have been tweaking their marketing policies or something like that. Anything happening in Northeast also from that perspective, which will be a structural gain for the industry in the long term. The Eastern players coming to Northeast or the Northeastern players going to East, like you are going. So any change in those trends you are observing?
I think what is happening is at this point of time, these changes which people are thinking that okay, somebody is sitting in Eastern India trying to sell cement in South India, and South Indian people trying to sell cement in Central India. Mm-hmm. All these trends are largely because their own domestic markets are suffering either because of partial lockdowns or the state governments are so. And these things which people are saying that they are looking at a structural change, I think they are more related to that particular point of time and their action which they are taking just to sustain certain volumes. There have been price actions also in various markets which people have also taken. But I do not think that those, there may be a temporary quarter or a 2-quarter phenomenon. But I think they will all moderate over a period of time.
Right. Okay, sir. Thank you very much, sir, for your time. Thank you very much for the call. And on behalf of Philip Capital, I would like to thank the manager of Star Cement for the call, and also many thanks for joining the call. Thank you very much, sir. Really useful. Thanks.
Thank you.
Thank you. On behalf of Philip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.